I want to answer a question that I've been getting, and it basically goes something like this. Hey, I use a particular indicator. Can I use it along with your program? And the answer is kind of yes and no. Yes, you could use it, but then you make things more complicated. All right. And the reason being is that the more layers that you add onto this, the more things that have to line up for you to get a trade. And what you'll see is that for every trade you might get using your particular indicator along with my whole program, you probably missed 2 to 3 other trades that you didn't need the indicator. So let me explain. This is the New Zealand yen daily chart, and I realize most of you are not going to trade off of that. But here's a situation where we had sell signals up here. Now, because you're above the moving average, you're not going to take a short. Well, because basically the thought process is that trend traders look to either buy when the market pulls back to moving average, or they want to see it staying above the moving average and just go in that direction. So you're going to miss things up here. Big move off the bottom here that you would miss. Okay, because conventional wisdom is that if you're under the 200 period moving average, it's sloping down, you don't go long. Now this was one, I mean, this was beautiful. I mean, this is textbook. It went down like 1,000 pips. Okay, this is a situation if you do want to use your moving average along with my program, you can do it. Consider it icing on the cake if you do get the arrow at your particular moving average. But what you have to remember is that you're going to miss a ton of trades. Like for instance, there was one up here that you wouldn't have taken based on conventional trend trading above moving averages. Another situation when this thing rounded in here, you had a big run up. This was one where you came close, but depending on your methodology, some people want to see it tag that moving average before they can take the signal. But if you did see the market getting close and then you see one of my arrows based on my indicators, you can do it. These were big trades that you would have missed based on moving averages and so forth. So let's take a look at something in a more realistic time frame that you might look at. And what I'm going to do for this is, a lot of traders, I mean, there's a ton of moving averages. People use the 5, the 8, the 10, the 9, the 12, the 13, 20, 21, 34, 35, 36, 50, and so forth. And there's no magic numbers. Each moving average has its day in the sun. So every once in a while you'll get lucky and it will tag your moving average, but for every time it does that, it's not going to come near your moving average. So let's go to one that's very popular, is let's just say the 35 period moving average. And I picked that because some people use the 34, some people use 35, some people use 36, and they don't make a bit of difference which one you use. But let's use the 35 just to average it out. And it wouldn't matter if I used exponential, simple, or so forth. It's all the same. So here's the situation. Remember, we're on the New Zealand. Let's get to the 1 hour. We had a sell signal up here, which you wouldn't get because you're above, right? You had a buy signal up here. You wouldn't take that because you're below. Massive move down. That was 140 pips from near top to bottom that you would miss because of conventional wisdom, right? Missed a big move up here. That ended up dropping 64 pips. Okay, even if you got 40 pips out of that, that would have been great. You missed this one. You missed the big drop here. You miss a short one here. Short trade. This one didn't fall through much, but you could get a little bit. So you get the idea. We've already probably seen about 8 or 10 entries, and you missed all those trades, and yet I haven't seen one at the 35 period moving average. missed this massive pop off the bottom here. That's 100 pips, so probably missed 1,000 pips or more, just taking a wild guess, if you were simply waiting for your moving average to coincide with everything. Another big trade off the bottom. This was one didn't really go anywhere. Take a quick peek at one more time frame. Let's say the 15. You missed this nice little trade down here. That drops 44. This was under the moving average. You're not going to be taking that if you're waiting for bounces short off of your moving average. And you can see a lot of these like happening under and over the moving average. So remember, if you're going by moving averages, you're not going long if you're above or below the moving average, and you're not going short if you're above it. So once again, you miss this big trade down. You miss this move up. You get the idea, right? And if you'll notice, look how, yes, you had bounces off this 35 period moving average, but you also missed all these other ones. So probably what you would have to do is not combine them. In other words, what I'm saying is you don't wait for my things to line up with whatever else you're using. You use them completely separate strategies. If they both line up, great. Okay. But don't wait for that, because as I pointed out, you're going to miss dozens of great trades. But then if you are the kind of person that buys bounces, right, at a moving average, then you can go for it, but keep that separate. All right. But the big difference in what I'm doing is that you catch trades in ranges, trends, counter trends, breakouts, and so forth. So you get a lot more opportunity. Anyway, I hope that answers the question you might have about indicators. The markets are going to be closed soon. It's excuse me, about 3:30 New York time for me, Friday afternoon. So I'm just going to take a kind of a quick look around some pairs. No particular pair, for any particular reason. I just want to show you from current activity and then go back, whatever, a few days, few weeks, or so forth, depending on the time frame. This is a CAD YID 1 hour, and I'll kind of let the arrows do the talking. And the thing to keep in mind is we're able to get trades both ways. Kind of the curse of trading is we spend a lot of time learning all kinds of techniques, all right? And the conventional wisdom is wait for higher highs, higher lows, retracements, pullbacks, Fibonacci retracements, whatever you want to call for them. Wait for it to pull back for a moving average. So we're very happy when those conditions start to line up. The problem is we get so locked in, we get blinders on to the fact when the market is breaking down against our initial analysis that we fail to miss these counter trend moves. So more than ample opportunities on the 1 hour. I'm just going back into June. I'd kind of scroll back until we run out of arrows. I think that was it right there. Yep. Take a peek at the 15-minute just for the heck of it. For those of you who like a little bit more action. Sometimes you get lucky, okay? This is a particular trade. I don't have all the indicators on here. I think we probably would have got in, but you know what? It would be a small loss, okay? or scratch, depending on how you handle it. Small move up, caught it down. Remember, on the arrows, we're not going in here. We have to have some things. We have to wait for the market to kind of get a reversal pattern in here, and I use indicators for that. And generally what you'll find is that when you get a signal based off of this program, the trades are more often than not going to go in your way pretty decisively. If they kind of sit there going sideways for a bunch of bars, it's probably not going to work out. See, and another option you have, but then you kind of start using discretion, which might kind of really bite you in the butt. And what I mean by that is, you could say, well, I think the trend is going up. I'm only going to take the arrows that are going with the trend. But then what happens is, you miss these little counter trend moves. There's this move here. I mean, it only drops 10 pips. Okay, but this could have been the one where the market collapsed. This one drops 18, all right? Anyway, once again, tons and tons of trades. This one wouldn't have got filled. I just know by the arrow placement. Okay, I'm going to pull up some other pairs in a few minutes. I'm going to take a look at the stock that everybody knows, Apple. Okay, this is one of the beasts of tech, as they call it, right? I mean, this was a massive move here. When it got its signal, the entry would have been about $369 a share, $370. It's now at $419. We had this drop here. That went about $25 down. See, we had a continuation move here. That went up about $25 again. And these kind of trades can be great for option entries, all right? But that's something I don't teach. Options are a whole nother ball game, as they say. All right, you really got to know what you're doing with options. This wouldn't have got filled here. I just know by the bar. This eventually went up $40. I mean, big signals, right? $80. You get the idea. Well, this was back in February, so that's everything crashed back then. Let's take a look at the Godzilla of stocks. This is Amazon. I mean, it's insane. $3,050 this thing. Actually, $3,171 right now. It's insane. It seems like this yesterday. It was like this hopeless book company that all they sold was books and they could not make money to save their life. Who would know that 20 plus years later, Jeff Bezos would be the richest man in the world and this company would have its hands in a million different businesses. But so this is a 1 hour. Big moves, all right? Just going to scroll back in time. I mean, you can kind of connect the dots. This is hundreds and hundreds of dollars run up. But this is kind, you don't know it's going to do that. And you can see, okay, these were, you know, kind of trend trades here, right? Trend, 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 counter trend, right? Counter trend, trend. Counter trend. But it's great to have the options to be able to take it both ways. So here we're back in April. And then if I do this, like let's say I mark this here, say you want even more action, probably if you do like say a 30-minute, you didn't get a signal there, maybe you get on a 15. You can see we had a sell signal up here. This one wouldn't have got filled here. I just know by the where the bar is. This we would have got filled short. No, we wouldn't have got filled in this area. We could have got an entry over here. This probably be one where you would be stopped out at break even. Anyway, tons of trades. This one you wouldn't have got filled. This one you would have. Short little pop down. I mean, it's kind of crazy, but it went like $40 down. That's how big of a range this thing has. Take a quick look at Bitcoin. This is something that's really the Bitcoin, you know, fanatics. Bitcoin's really come to life again. At one point, I really thought this thing was going to be done with. You know, we had the big crazy bull market on it, then it really crashed down, but it's coming to life again. So on a 4-hour chart, we caught a big run up. We had a trade here. I'd have to put the other indicators. We might have got filled, so this might have been one where you get plus or minus a little bit of profit on it. But see, you don't know. This could have been where the market collapsed and it comes all the way down here. That's why you can't overthink these signals. You just got to go with it, and every once in a while you get lucky and you get a situation like this. Now keep in mind, this is not a conventional trend trade, because most people trend trading, they want to see the market pull back and then they buy the next leg up. This is more of like a momentum trade. So this software can catch these momentum trades that come out of congestion. You'll notice that the market was sideways for several days there. This one wouldn't have been filled. I just know by the bar. So that's it for Bitcoin. All right, guys. It is now 7 a.m. Saturday morning for me, New York time. Just wanted to add one last example before I wrap this video up for you. I'm looking at a market I've never seen before. This is what's called the, let me just highlight it. It's the Norway 25 index. Okay, so just want to show you it really doesn't matter what market or index or what product you trade. It's all the same. So this is a 1-hour chart. You can see sometimes we just don't catch a move on a particular time frame. In other words, this is the 60. It didn't quite get overbought, right? It did have a long here, but it wouldn't be filled at this point. It caught this level off of here. And these are trades that I really, really love off of this thing. When I see, you'll notice that down here, right, that's retesting all these lows. When you see that, that's just a very, very high probability trade. And keep in mind that's not, trend following, people not looking for that type of thing, because usually the conventional wisdom is if you start breaking, in other words, what a lot of people do is they like to look at trend lines. And they'll say, okay, if the market broke a trend line, then they're waiting for a pullback to take it the next leg short. So if you prescribe to that type of analysis, you will miss opportunities. Yes, there will be times it's going to work, but I like to be able to play both sides of the market, okay? So you can see we didn't have a lot. We did catch this high off of here. And one thing I want to point out is that there could be a time, and I don't know if it happened in this instance, where it starts to go sideways. It might be that the market temporarily has an arrow. In other words, it initially shows an arrow, but the arrow will disappear if you refresh the screen. That's because it never actually closed. In other words, you have to have a close, like a crossing of the two lines here, to have an arrow print. So it can be like temporarily, maybe interbar, the line crosses and prints an arrow. So sometimes what I'll do is just to double check, when a bar closes, I will refresh the screen just to double check that arrow sticks, okay? So I'm just scrolling back. And okay. Of course, the software really, excuse me, did brilliantly at nailing the whole collapse during the, the COVID, when it finally became public. Up here, took a counter trend here, right? Caught the big drop. And I'll just switch to one at a time frame real quick here. See a buy off the bottom here, sell. This is a sell signal here, but it wouldn't get filled just based on the criteria. Really, the thing to keep in mind is that most markets are interrelated. If I pulled up probably whether the FTSE index, the Dow Jones, the US index, they are going to be very similar. So if I show you entries on, let's say, this Norway index, you'll probably find very similar timing in most of the other indexes. Well, the market's all correlated. Anyway, that's it. Once again, I'm just really trying to get you more and more exposed to all the opportunities with this software. One thing I just want to point out real quickly is that I will be sending out a video probably in about 3 weeks that really walks you through everything about this program in much more detail. I'll explain what this is about. This is just not like an indicator or a suite of indicators I'm going to be offering. It's not a system, a program in itself. It's actually a complete coaching program along with a suite of indicators, okay? Because to me, if I just sold you some indicators and said, okay, good luck with it, I don't want to do that. I don't want to just say, oh, here's a couple quick videos, good luck once again. I don't want to offer just maybe the indicators and a whole bunch of in-depth videos, but then leave you on your own. The best way to become really good is through a coaching program where you are given all the correct software tools, and then really learn how to do it in an environment where you're learning on a regular basis. So anyway, many more details to come. I hope you have a great weekend.